TradeTheNBA.com. This is John's reports for the 27th, and we're continuing to push new highs. Not surprising. This is the move that begins your push towards what 10,000 S&P. And no, it's not necessarily hyperbole. No, it's not going to happen overnight. But what you see is the difference between what takes place between Europe and the U.S. in this particular case. You've got strong investment taking place within the U.S. Early on here. This was all that capex that Trump had been building for the beginning of his term before he got into the Iran quagmire, and it's going to pay off probably closer to the beginning of next year, and then you're going to start to see the definite benefit from it. But it's already taking place, and the market is pre-digesting them, but you're also digesting the fact that you're not going to see interest rates dropping to zero or anything like that. And as long as you don't tip into recession from hyperinflation or whatever, you're going to see a continued move of the market higher. Just the multiples are there. You've already discounted the inflation value uh, already. It's been set within this, initial climb, and from there, then you're going to obviously have to have companies that are producing growth. Blah 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 blah. But from a reading standpoint, you look at this. You see the steel doing exactly the same thing. So short-term buyers fade off, reset. You're still at the highs. So even if it dips below the 13 and you end up with a little bit of softness through that, the turnaround is still going to lead to most likely, well, it depends on how this dips, but by the beginning of the month where new fund money is about to come in, your next run. That's the easiest way to see it. You do see, though, that short rising, well, fine. As long as you have magenta over, that just becomes short cover rallies. And NASDAQ is proving show that quite nicely here as you continue to break further and further ahead. Of course, there's going to be pullbacks with it. It's not even the issue. It's just the broader construct of what's being developed and the bifurcation that's going to take place between the U.S. versus the rest of the industrial world, at least Europe, and that where you see, France, Germany, all of them in, negative capex growth and stuff, and it's just going to continue that way because of the policy choices. That's the big difference. So it's pretty straightforward. From an oil standpoint, it's still ridiculous levels. This isn't helpful to anyone, and it's just a drain on potential growth. You lower energy costs, and you'll see the U.S. pick off. And I know that that's what Trump's counting on. However, do we see any situation resolution with Iran? It doesn't look like it. It looks like they're bargaining for some kind of payoff situation. Um, so there's that. Are they going to pay for it or what? Fine. You've done some damage to them, but you know, not having the straight flowing, it's a bottleneck. It's a problem. The excitement, though, for Europe and this whole disproportionate move relative to GDP growth and stuff is about potential war footing and the war spending that the Europe is going to do. Because everyone's excited about market flow, we've got this muted situation. The inflation is going to be there. We're going to start to see it. Probably you'll get the first indications in August of that of significant moves, particularly as food prices prepare for the fall. That's going to be where things really start to get noticed. So muted for now, but that's where you'll have that shift where declines will come in, and then commodities will take the lead on it. Bitcoin likewise still relatively close to the highs. 50% return here is pretty much bottlenecked from the highs right there. You have to slide over a little bit to get a better view of that. From the 50K standpoint, so you can see we had the gap up, and basically they filled all the way back from the European session, and then they made the late move back to the upside, but it still leaves the open gap, and there can be a lot of people talking about that. That's going to have to get filled at some point. It doesn't necessarily work in that order, but yes, likely in any kind of downturn, you'll get a return there. That's not that big a surprise. It's just when, and it's not an immediate effect. Particularly as you look at these readings, we had the short cover rally here with magenta over yellow, and that continued, and you get the strong move to the upside, and that just every time where shorts think they've got themselves a great run, we can see that it's not when you have that magenta rising over it, and DOC green coming from the underneath side there, crossed over, and really led to that propelled move, which you had the orange underneath, green and red at that particular stage on the DOC, and boom, and popped up. From a 5K standpoint, this is what the pre-market looks like at this particular stage. So all happy and rosy. But you can see intraday, there's still plenty of interim action to be able to play both sides of the situation. And in this particular case, you caught a lot of people upside down who bought after the gap up. This is what we're talking about: futures versus, options trades or whatever. The major gap up, and European session lifted it. So by the time the U.S. session comes around, you're already pretty well into it, and then they just suffered pretty much losses from buying into that gap. And then when it fully retraced, that was where the real buy configure took place and led to the rise that we're seeing right now. So that's the long and the short of it. All good. Anyway, we'll keep it updated and get ready for the new month coming in. It should be exciting. As always, trade well.